Now we'll move on to the next problem in departmental accounting, question number 5. Very interesting problem. So your attention is required. The following balances were extracted from the books of Messrs. Division. You are required to prepare departmental trading account and P&L account for the year ended 31/12/18 after adjusting the unrealized department profits, if any. So the mandate is very clear there. You need to prepare trading account, P&L account after adjusting unrealized departmental profits, if any, that is stock reserve. If you have any stock reserve, you need to eliminate that and then prepare the trading account and P&L account. Okay. So what are the information given to us? Opening stock is given, purchases is given, sales is given, both for department A, department B. Fine. General expenses incurred for both the departments were 1,25,000. It is common. General expenses, common expenses for both A and B is 1,25,000. But how do we allocate the expenses to A and B? That is not given in the problem. So we can safely assume that sales can be the reasonable basis on which the general expenses can be allocated. That is the first understanding. Second, and you are also supplied with the following information. They are giving you some details. What is that? Closing stock of department A, rupees 1 lakh. Okay. Including goods from department B for 20,000 at cost to department A, which means the closing stock of department A is 1 lakh. Right? So when you prepare the trading account, he says the closing stock of department A is 1 lakh, but in that 1 lakh, the goods of department B are lying unsold, which means B would have transferred goods to A, and that is lying unsold in A, that is 20,000. That is essentially B's stock lying unsold in A is 20,000. Right? So I repeat, the closing stock of A is 1 lakh. In that 1 lakh, right, the stock of B lying unsold in A is 20,000. Right? Similarly, the closing stock of department B is 2 lakhs, including goods from department A for 30,000 at cost to department B, vice versa. Now they say the closing stock of department B is 2 lakhs, right? And in that 2 lakhs, the stock of A lying unsold is 30,000, right? So it's basically an interdepartmental transfer. A transfers to B and B transfers to A, and the stock of those departments are lying unsold. This is the position of the closing stock. Now, if you look at the third point, they talk something about opening stock also. Opening stock of department A and department B include goods of the value of 10,000 and 15,000 taken from department B and A respectively. So when we talked about the closing stock, there is a corresponding reference to the opening stock also. They say opening stock of department A and department B includes goods of the value of 10,000 and 15,000 taken from the B and A respectively. So again, there is an interdepartmental transfer last year also. So that is a part of the opening stock also. So you have two sets of information now. Stock reserve is involved both on the opening stock and on the closing stock. Right? So we need to eliminate and we need to calculate what is the stock reserve to be actually debited to P&L account in this year, because that is a mandate. Para number 1, it says you need to prepare a trading account, P&L account after adjusting unrealized profits, if any. So there is a hint given to you in the problem that there is going to be an unrealized profit, but you see that the unrealized profit, it is not only in the closing stock, but it is also in the opening stock also. So we need to adjust the stock reserve both in the opening and closing and try to find out what is the amount to be debited to P&L account in the current year. That is the expectation. Right. Last line is very important. They say the rate of GP is uniform from year to year. GP ratio is the same. We are doing for 2018, right? 31/12/18, which means the GP ratio of 2018 is the same as 2017. So 2017 and 2018, the GP ratio are equal, which means we need to find out the GP ratio. That's correct. Once we find out the GP ratio for 2018, right? We can safely assume that the GP ratio of 2017 is also the same, correct? This is given in the last line of the problem. So how do we find out the GP ratio of 2018? Simple, you prepare a trading account, right? Because you have opening stock, you have purchases, you have sales, you have closing stock also. So we can find GP. With the GP, can't we find out the GP ratio? So that will give the GP ratio of 2018, and then you can assume that the GP ratio of 2017 is also the same. So once we get the GP ratio, can't we find the stock reserve, which is included both in the opening stock and closing stock, and find the differential? Yes, we can. So that is the approach to be adopted in the problem, right? So let's get into the solution. Please focus on the solution, and the writing part of the solution we can actually defer it towards the end of the video. I will give you a couple of minutes where you can copy the solution. But now for time being, please focus on the lecture and the solution. As always, first the main solution is given, followed by the working note. Main solution: departmental trading and P&L account of Messrs Division for the year ended 31/12/18, right? Opening stock, purchases, sales, closing stock. All the four data is given to you in the problem. You need not invent even a single number. Opening stock 50 and 40, is it given to you? Please find 50 and 40 given to you, right? What about purchases? 6 lakhs 50 and 9 lakh 10 given to you. Sales 10 lakh and 15 lakhs given to you. Closing stock, it is also given to you. Look at point number A. Closing stock of department A is 1 lakh. Look at this. Closing stock of department A is 1 lakh, right? And closing stock of department B is 2 lakhs. That is also given to you. Closing stock of department B is 2 lakhs. That is also given to you. So that is also here. Make sense? So once we tabulate this data, right, what you get a beautiful gross profit there, which is a balancing figure. So it comes to 4 lakhs and 7 lakh 50,000. And once you have this 4 GP, can't we find the GP ratio? What is GP ratio? What is 4 lakhs by 10 lakhs? What is GP ratio? GP by sales in 100. 4 lakhs by 10 lakhs, which is 40%. And 7 lakh 50 by 15 lakhs, which is 50%. This is exactly what you see in the first working note, which I've arrived here. Look at this. GP ratio of A and B. Department A is 40% and department B is 50%. How did I arrive at that? Gross profit by sales into 100. That is the formula I have adopted. GP ratio. Straight away. So simple. Now let's move on to the P&L account. Once the GP is arrived, then we bring by gross profit 4 lakhs and 7 lakh 50,000. Straight away we will bring it down. Now general expenses we discussed earlier, 1 lakh 25,000 incurred for the organization as a whole. We need to allocate the expenses between A and B in the ratio of sales, right? So what is the ratio of sales? 10 lakhs is to 15 lakhs. Can we say it's 2:3, right? 2:3. So if you can allocate 1 lakh 25,000 into 2 in the ratio of 2:3, you will get 50,000 and 75,000. You can take a calculator and you can work it out. You will get that, right? So 1 lakh 25,000 into 2 by 5 into 3 by 5. That's all. Okay. So you will get the answer. Then net profit is 3 lakh 50 and 6 lakh 75,000, which is a automatic balancing figure. Until this point of time, nothing is complicated. It's cakewalk. It's very simple, right? Now coming to the general P&L account, this is where things will become a bit complex. So by net profit, we will say department A and department B, 3 lakh 50 and 6 lakh 75,000, which is a straight carryover from here. Now come to the stock reserve part. This is where you need to be very clear and attentive in the lecture. Stock reserve, department A and department B. I've got some numbers here, but how did I arrive at those numbers? How did we compute the stock reserve? You see reference, I've said working note 2 and working note 3. Working note number 1 was GP ratio. So working note number 2 and working note number 3 are the areas where I have worked out the stock reserve. And remember, there was one information in the problem which said GP ratio is the same in both the years. So what is the GP ratio of 2018? It is the same in 2017 also. So when I say GP ratio is 40% and 50% for A and B in 2018, it means it was the same in 2017 also. Make sense? Now, let's calculate the stock reserve. Now calculate the stock reserve in Department A. You have to be very, very, very careful here. Now, attention. Look at the working which I have done. Stock of B lying unsold in the closing stock of A is 20,000. This information is given to you in the problem where, let's try to identify that line. Look at this. Closing stock of this Department A is 1 lakh, fine, including goods from Department B for 20,000. This is what the first line is. Stock of B lying unsold in A is 20,000. So let's be very clear. In A's closing stock, in the closing stock of A, B stock is involved, is lying unsold, which means B would have transferred goods to A and that stock is lying unsold in A. So obviously there is a markup of B which is involved here, right? Which is included. So don't you feel that we need to eliminate the margin of B? That's the second point. What is the GP ratio of B, which is 50%? We just now worked out. So 20,000 into 50% will be 10,000. This is the closing, this is the stock reserve on the closing stock, or the unrealized profit on the closing stock is 10,000. You have to be very clear in this. You should not apply 40%, you should apply 50% because in the stock of A, in the closing stock of A, B stock is involved. So B would have transferred goods to A. So obviously when B is transferring goods to A, B would have loaded, added a profit margin there. And that is lying unsold. So that profit margin is included in the closing stock. So we need to eliminate that closing stock, unrealized profit. So from that 20,000, when you calculate 50%, which is nothing but the GP ratio of B, you get 10,000 as the stock reserve, closing stock reserve. Similarly, if you could do a similar calculation for the opening stock as well, the stock of B, very same. Just replace closing with opening. The stock of B lying unsold in the opening stock of A, that is also given to you in the problem. Look at that. Opening stock of Department A and Department B include goods of the value of 10,000 and 15,000 taken from B and A respectively, which means in the opening stock of A, 10,000 worth of goods belong to B. Right? That's exactly I have documented here. I have just captured the information given to me in the problem. Now, what is the GP ratio of B? Again 50%. So 10,000 into 50%, that is the 5,000, which is the stock reserve on the opening stock. So once I compute this, I have a stock reserve on the opening stock. I have a stock reserve on the closing stock. What is the differential between the two? It is 5,000. How did I find 5,000? Look at this. I have used the words A and B here. Right? So it's basically A and B. So A minus B, that is 5,000, which means in simple terms, my opening stock reserve is 5,000, right? 1/1/2018, we are doing for 31/12/18, 1/1/2018, my opening stock reserve is 5,000. I want my closing stock reserve to be 10,000. So what should I do? Right? To make 5,000 into 10,000, I have to add another 5,000 to the P&L account. That is exactly the difference is A minus B. Clear? Similarly, if you could do a calculation for the stock reserve in B, it's a very simple calculation, same calculation. Look at this. Stock of A, so we are doing for B now. So stock of A lying unsold in B is 30,000. This is also given to you in the problem. Look at this. Closing stock of B 2 lakhs, including goods from Department A for 30,000. So that information is also given to you. That is what I am documenting here. Correct? Stock of A lying unsold in the closing stock of B is 30,000. What is the GP of A? 40%, right? Which we arrived in working note number 1. So 30,000 into 40% will give you 12,000. Mark it as X. Similarly, So you will get 12,000, which is the stock reserve on the closing stock. Similarly, if you can do an exercise for opening stock reserve, what is the stock? What is the stock of A lying unsold in the opening stock of B is 15,000, which is also given to you in the problem. Apply 40% GP on that, you will get 6,000, which is the opening stock reserve. So what is the differential now? 12,000 minus 6,000. 1118, my opening stock reserve is 6,000. 31, 12, 18, I need that to be 12,000. So the differential amount I need to create, which is 6,000. So this 5,000 and 6,000 respectively, which is the additional stock reserve which needs to be created, right, will be debited to the general P&L. Look at this. This 5,000 and 6,000 is forming a part of the general P&L. Right? And once you do that, whatever profit you are arriving, that is the final net profit, which is a balancing figure, 10,14,000. Right? So this is a very important problem, and where because you have interdepartmental transfers, so A transfers goes to B, B transfers goes to A, so there is always a loading. And the interesting part in this problem is there is a loading not only on the opening stock but also on the closing stock. So you have both opening and closing, and you need to identify the differential, and you need to create a stock reserve for the difference. I hope the explanation provided is pretty clear. Now, friends, you can actually take up your notebook and you can start copying the solution. So I will focus on the major aspects of the problem. As usual, first you need to document the departmental trading and P&L account. This is the main solution. Kindly open a departmental trading and P&L account for the year ended 31/12/18. It's a pretty straightforward calculation. Right? Now, you can copy the general P&L, and you need to ensure that you give the working note reference for this stock reserve. Very, very important. Cross referencing has to be given properly, otherwise you will not get the marks properly. You will lose track otherwise. So working note 2, working note 3. So kindly document the general P&L account also. Once it's done, you can actually work out copy the working notes. Working notes carry a lot of marks. Write down the working notes. There are 3 working notes basically. Very, very important. First working note, GP ratio. Please copy that. It's 40%, 50%. Also do the calculation there. 4 lakhs by 10 lakhs, 7 lakh 50 by 15 lakhs. Once you have done that, please copy the second working note. That is the additional stock reserve to be created in Department A. Additional stock reserve to be created in Department A. Please copy the exact format. The structure is very important. And once you have done that, you can copy the last part, which is the additional stock reserve to be created in Department B. Please copy that as well. Okay. So I think by this time you should have copied. You can actually pause the video and you can actually copy the solution. In fact, in every video, the last 2-3 minutes will be only focusing on you copying the solution. So you guys can actually pause the video and then you can actually copy the solution. You need not hurry. So the main focus is you should listen to the lecture first. And the last couple of minutes, you will invest your time on copying the solution. You can pause the video at that particular point and then you can do it. Okay. So I think we are done with the solution now. Hope it's clear.